Hi everyone, I hope you're all doing well, and today we're going to talk about the YouTube hyper growth stocks that have been crashing recently. So a lot of these companies have been really heavily featured on YouTube, or they are very hyper growth. So we talk about companies that are probably putting in like 30% plus revenue growth. Some of them, or most of them, have very small market caps, probably under 5 billion, and as well as that, a lot of them most of the time are unprofitable. So we're going to talk about that. I'm going to give my opinions on the current situation. So if you could smash the like button, if you are new, subscribe as well, that'd be absolutely amazing. But when we talk about this situation, a lot of these companies have been featured on YouTube, and a lot of them have had a massive dip in the share price recently. And it's not the stock market in general. We look at the FTSE 250, we look at companies in there. Greggs is a company that's sitting at all-time highs. We look at growth stocks, S4 Capital, sitting at all-time highs. And not just in the UK side of it, if we go to the S&P 500, the S&P 500 sitting at all-time highs. And if you go through the majority of the companies in the S&P 500, a lot of them are sitting at all-time highs as well. And it's not just, your value plays, your dividend plays, they're all doing very well. You look at some of the growth stocks in there, Facebook has been on a crazy run. Amazon's starting to move towards, and their tech companies, growth tech companies, are starting to move towards 52-week highs. Visa, and even other companies in there that are dividend plays, value plays, a lot of them are doing very well at the moment. And just generally, when you look at a lot of stocks, the stock market, new all-time highs, even the Dow was making all-time highs. And that's the thing, is it's not like the stock market's slumping at the moment. The stock market's actually performing very well. And if you have a lot of stocks that are not, hyper growth stocks, and you have a bit more of a diversified portfolio, you're probably not noticing this, because like I say, other companies, whether it's growth companies, dividend plays, value plays, a lot of them are near 52-week highs. But there's a good selection of stocks that are not performing in line with what the market's doing, and that's what we're focusing on today. I was going to make a video about skills actually, but skills actually comes under this category of a hyper growth stock, and I want to be talking about that. I'll probably make an individual video about that in a few days' time. But let's be honest, when we look at a lot of these with the stock market all-time highs, we look at a lot of these hyper growth stocks, and a lot of these hyper growth stocks have been, especially featured on YouTube over the last 2 or 3 months, have absolutely sunk down. If we look at CCIV stock, I must have seen a video on a CCIV feature on YouTube nearly every day, and that stock's sunk down absolutely huge. And even stocks that I'm a really big massive fan of, Palantir has sunk nearly half its value in the course of 2 months, and that's down huge. One stock I own, which is Tattoo Chef, that one's down quite a bit over the last few months. And obviously Skills, which I'll probably make a video about in the next few days, that's a stock that I own that is a hyper growth stock and is down huge. But the common thing with a lot of these companies is you talk about companies that are under 5 billion, have massive amounts of revenue growth, and quite often they're unprofitable companies. And these are the ones that are down. You look at the rest of the stock market's doing very well. But these hyper growth companies, these smaller market cap companies, are the ones that are down. And there's a few things that I'm starting to see here, and that is that stocks only go up. And I think what has happened over the course of the period of the last 12 months is that when we go back to March 2020, people started getting involved in the stock market, and people started getting involved in the stock market got into dividend plays, and they went, okay, I can make some decent return on the share price and some good dividend, but I don't want just that. I want to go all into growth stocks, and then Facebook, Amazon, and everything like that. And then thinking, okay, I'm getting good growth, but I'm seeing some other companies that are going up 100% in a couple of months. So now I'm going to move out of growth stocks, and then I'm going to go into these smaller market cap companies that have massive amounts of revenue growth, and they perform even better. So I'm going to go into them. And people have got used to this situation where stocks month after month, or even day after day, are going up 1, 2, 3%. And people have got used to that. And unfortunately, the stock market doesn't just do that. And sometimes the stock market will chill out, sometimes the stock market will go down, and that's part of the game. Stocks are not going to go in one direction. And you'll see that on a stock chart. When you go on a long-term stock chart, most of the stock charts will be up and down or sideways for a little bit. And I think people have got a bit used to the stocks only going up, and also that people have got the feeling of, I want to be really aggressive and just chase after the stocks that are growing absolutely huge, that bring in massive gains. But even them stocks have a time period where they chill out for a little bit, and that's how it works. And what has happened, especially I think with probably more retail investors, with definitely the more younger audience that are involved in YouTube, have seen, and that's why I think, it's not a bad thing that most YouTube channels cover, a lot of these hyper growth stocks, because the hyper growth stocks are more attractive to the younger investors that want to be more aggressive, that want to get the higher returns, which, I don't blame you. The way that you get massive returns is by picking up companies that Wall Street haven't noticed yet, that are probably 1 billion market cap companies to 5 billion market cap companies that are probably unprofitable, might be profitable soon, but are unprofitable at the moment, that are growing huge. And most of the time, those are the companies that Wall Street are missing at the moment. They're more focused on the Microsoft, Facebooks, and the bigger companies. Now, there's nothing wrong with that. I think the perfect investor has investments in value stocks, have investments in growth stocks, that have investments in small hyper growth stocks. I always say that the best investor is one that can cover all them areas. And personally, that's why I do have a lot of hyper growth stocks in my portfolio, and I am quite young as well, and I want to be more aggressive, and I am more aware that sometimes everything rotates. Only a few months ago, companies like Facebook and even other companies, value companies as well, they did nothing for a while, and then the rotation happens. This always happens in Wall Street. Rotation happens. People go from one area, from value to growth, from growth to hyper growth stocks, then go back into value stocks, and that rotation happens. And that's why the stock market sometimes has periods where it goes up loads, and then it has periods where it goes flat or it goes down, and it's just part of the cycle. And that's what happens. But there's a lot of people at the moment that have got into these hyper growth stocks and then now starting to get a bit fed up because they're getting into these hyper growth stocks and they've kind of peaked out and they need time to chill out before they go up again. And that's what's currently happening in the stock market. And it kind of leads me on to this next one, which is having the patience. Stocks, I've seen companies that go from a $5 stock, $10 stock, $20 stock, and people just expect it to keep going up, but it just can't happen. Valuations eventually catch up with a lot of stocks. Rotation happens into the stock market, and the big thing in the stock market is having patience. If you have patience, that is when you make your rewards. And it comes back to two examples I'll give you but I think it was 2018. That was the year that Apple, for I think maybe a year and a half, the stock did nothing in a year. And if you were investing in that company, there could have been times where you're sitting in Apple thinking, I'm fed up of owning this company. This company does nothing for me. There's other companies going up and I'm stuck in this company. I've had shares in it for a year and it's done nothing. And then you might go sell out of it. You might get bored of it, and if you haven't got the patience, that's what happened to you. But from the end of I think it was 2018, Apple then goes up to 250% or something. And I've not got the exact numbers in front of me, but I'm sure I'm showing you on the screen right now. But that's the point, is that the big thing with the stock market is that the thing that most investors miss in the stock market, and in my opinion, the biggest thing that people need to learn with the stock market is patience. And if you have patience, that is how you make money in the stock market. And unfortunately, sometimes there's got to be times where you've got to be willing to. That's why I always say when I buy a stock, the first 6-12 months, I'm kind of like, you know what, you do your thing. I'm not bothered if you go up. After 12 months, then I expect something to start kicking on, because you would hope that the business plan starts kicking in and the revenue starts kicking in, the profit starts kicking in. And then eventually we might see the share price moving up. But that's why for the first 12 months, I invest into a company. I go, you do your thing. I'm not bothered at the moment. You go sideways for a bit. That just gives me more time to buy more shares. And then when you do wake up, we're going to have even more money made. And Apple's a prime example. If you were in Apple for, that period of 12 months, 18 months, there could have been a time when you got bored. There could be a time when you got fed up with the company doing nothing. But then if you sold out, you then missed out on a huge amount of gains on Apple. And that's just the typical point of having patience. One of the big ones I invested in was Tesla. And Tesla got massive amounts of hate for so many years. And I invested into that company, I think it was 2019. And in 2019, there was a lot of bears in the stock market for Tesla. It was 50-50. Obviously, it's a lot more quieter now, but back in the day, Tesla was massively hated in 2019. And I started buying into the company and I'm thinking, this company in the next few years definitely has to do something. You know, the amount of electric cars they're producing, they're fantastic, the sales increasing, they're near profit, EVs are only going to get stronger. And I bought Tesla, and Tesla for me, for a good 12 months, did nothing. In fact, the stock went down. I was down about 30% in Tesla in 2019, and that's when the stock was like $40. And then they would go fast forward to like the back end of 2019, and then the stock goes up over 1,000%. Whatever the stock's valued at now, I don't know what it closed at yesterday. Was it like 700 and something? And that's just a game of patience. That's the game of, I'm not going to get angry that the stock's moving down in the wrong direction, because I've got patience. I've got belief that I think the company, I know the company. I think it's got good things going for it, and I think these will come in. Wall Street will wake up and they'll start coming into the stock. And that's a prime example of just holding the stock that I believe in. And if you're buying great companies, if you buy companies that are going to be growing revenue, if you buy companies that are going to be growing profit, they are going to go up in value, 100%. I've never seen a company that has increased profit and revenue for 5 years and the stock just goes lower, 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 lower. It just doesn't happen. And that's the big thing. You just got to wait in your stock, and your time will come, and it'll wake up, investors will wake up to it, and the share price will move in the right direction. And that's the big thing that I think sometimes investors struggle with. And what hasn't helped over the last situation is stocks only going up. If stocks only go up, I think especially a lot of the new investors have got used to a market where we go up, 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 up every day. And especially like a lot of these hyper growth stocks, they're all burnt out. You know, some of these hyper growth stocks, some of these stocks on YouTube, I never said they're bad stocks. You know, there's some great companies in there, and that's why I'm invested in some of these companies. You know, that's why I mentioned Tattooed Chef. It's a stock that's heavily featured on YouTube. It's a hyper growth stock growing at 40% revenue rate, but I never said it's a bad company. I'm just saying it's featured on YouTube a lot. It's featured in it's a hyper growth stock, but it's been on a good run. But when you look at a Tattooed Chef, for example, if that company carries on growing at 50% rate, it's very much near profitability. And if it can start ramping up profitability, if it starts growing up on revenue, is that company going to stay where it is, or can you have the patience? And will that be higher in a few years? And that's the big thing that's going on in the stock market at the moment. And it kind of goes on to my last point, which is buy the dip. So like I say at the start of the video, you know, a lot of these stocks are going up in the indexes. There's more of the value plays going up, dividend plays going up, growth stocks going up. Growth stocks in the S&P 500 that are going up. But a lot of these YouTube hyper growth stocks, they're going down. And I think a lot of it is that people are getting a bit fed up because, you know, they got used to stocks that go up and up. And the valuations got really rich, and there just needs to be a calming phase. There needs to be that Apple phase where in 2018, a lot of these companies, you know, are you willing to just watch that company just calm down for 6 to 12 months? Let the valuation catch up. Wait for Wall Street to come back into these companies. And can you sit there for 6 to 12 months while the revenue increases, while it starts ramping up profit? Can you sit there and wait and then the valuations catch up? Because honestly, people will come back into these stocks. A lot of these hyper growth stocks that have been, you know, have calmed off in the last few months, they will wake up again one day if they're great companies. And that comes on to the buy the dip. Now, this is the time where you're looking at a lot of these companies that have been going up and up and up. You're getting them at half the value they were literally like 2 months ago. And then I'm seeing people going, oh, the rubbish, I don't want these now. Oh, I'm going to sell out them now. I don't want that company because it doesn't do well. Well, all these other stocks are going up. And this is the time where you should be considering, is it to buy the dip? You know, you're getting a great company. You know, some of these hyper growth companies are great companies. You're getting them at 50% dips. Can you have the patience to just sit there for 6 to 12 months, and then Wall Street come back into, the rotation happens, we go back into hyper growth stocks, and then these stocks are going to go up 100, 200% in the next few years. You know, some of these companies that are, the valuations they are at right now, the revenue they're going to put in, some of these companies are going to go up absolutely crazy. And the big thing now is a lot of these stocks that are featured on YouTube, and obviously a lot of these are featured on YouTube because that's, like I said earlier, you know, the stocks that have the bigger growth, people that want to be more and more aggressive into these companies, and the younger audience probably goes for them companies because they want the bigger returns. What you've got to consider with this situation right now is these hyper growth stocks is you've got to think about, okay, Do I have the patience to wait? Are they going to do very well in the next few years? Because if they do very well, you won't be buying the dip in these companies, because in the next 2 to 5 years, a lot of these hyper growth stocks, when the investors come back into them, when the revenue goes up, these stocks, if you buy the dip now and you've got the patience to hold it, a lot of these companies are going to go up huge amounts in the next few years. And the big thing right now is going through a lot of these companies and thinking, right, which are the best ones, which is the best opportunities? And if you can find the best opportunities, I promise you, we come back to some of these stocks that I mentioned in a few years' time, and a few of these stocks will be up hundreds of percent. 100%. I've seen it so many times on the stock market. I've been in the stock market long enough now to see how the stock market always works. And this is the biggest thing you need in the stock market, in my opinion. Because if you don't have it as a long-term investor, you really do struggle. But if you've got the patience, they will come back. They will come back strong. And I kind of want to make the video today talking about this and saying, look, it's always good to have a diversified portfolio. You know, that's the reason why I still have shares in like Visa in my portfolio. I have UK holdings of S4 Capital, Greg's, for example. I also have like Visa, I have Facebook, I have Disney, and like Boeing. You know, how many times do you see on YouTube Boeing featured? You know, and that's why I always like having them companies, because if the rotation happens, I'm always covered. You know, my stock. I've seen so many people saying like, "Oh, my stock market portfolio is down again today." I'll be honest, I think my stock market portfolio is just flat at the moment. It hasn't moved at all, because it's about 50-50. When these guys come back, it'll go up. You know, the tattoo chest, for example, the skills, for example. And that's why it's always good to have a diverse portfolio. But it's always good to have this. And then when you have this, when you see opportunities where these sell off, consider, you know, you're getting some really good hyper growth stocks that will come back into fashion very soon. But it's just having a chilling off time, you know. And I think one thing that people have got so carried away with it is just going up and up and up. But realistically, these now are where you're starting to see opportunities where where we talk about Apple, Tesla, where they did nothing for 12 months. These opportunities now where you want to be looking at some of these great hyper growth companies, they're a little bit sold off, and you want to be taking them opportunities, and you will get the rewards in a few months' time. Maybe a year's time, you know, it'll start kicking on, just like Apple in 2018, just like Tesla in 2019, you know. So I just wanted to make that video on this topic, because I've seen it mentioned a few times, and I've also seen a few people getting a little bit fed up with a lot of these, especially on YouTube, because that's where most of the stocks are featured. A few of these hyper growth stocks not performing when the market's going up and up and up. So I hope you enjoyed it anyway, and hopefully you learned something from that video. If you could, smash the like button. If you're new, subscribe. If you do want to join my private stock market group, link is in the description to my Patreon. And if you do want to buy some shares as well, there's some links to some brokers in the description. But anyway, that's the video for today, guys, and I'll see you on the next one.